What's going on, traders? The results are finally in for the year of 2019. We're going to be doing a review of the Swing Scan newsletter and looking at what we can do better for 2020. So this is the analytics sheet, and one thing I do want to point out before we get too deep into it is that we only started sending these scans out on July 8th of 2019. So we missed just about 7 months of trading before these alerts started getting sent out. And I'm really excited to start 2020, starting from the beginning of the year and having a full year of scans going out to you guys and looking at what we can do in the full year. You can see I tracked the ticker, whether we were looking at a long or a short. Majority of them were long, just to sort of put that out there right away. I looked at the entry, exit, profit per share, and percentage gains, all standard things you would sort of imagine and want to know when we were looking at scans and trades in the market. I do want to say that when I was looking at entry and exit, I always gave the market the benefit of the doubt, never the trader, just to account for slippage. Maybe you didn't play the trade exactly right. Again, always giving the market the benefit of the doubt to make it a little bit harder on ourselves, but we did come out profitable. So in the middle, we do have the summary. We sent out a total of 171 alerts, of which we took 104 trades. That's visualized by this pie chart here on the right. So 61% we did take, 39% we didn't take, but that's a-okay. Here at Trade Brigade, we would rather not take a setup than get caught in some nasty trade just because we were sort of forcing it and then pay for that in the long run. Of those 104, 80 of them, not 80%, 80 of them were profitable, which equates to 77% accuracy. 23% were losing trades, but that's fine. Some fun metrics that we did look at. So if you were to trade one share of every single alert that I sent out in 2019, you would have been left with $227.62. Average profit per share is $2.30. Again, that's more of just a fun metric. Obviously, $2.30 matters more to a sub $10 stock than it does when we're looking at a $200+ stock. So that's why underneath we did calculate the average percent gain, which was right around 6%. And that is visualized by this chart over here. And this is really important just because I want to show you how important it is to minimize your risk and manage that risk to be sustainable in the long term in the market. If we look at all the winners, much bigger than what we see to the downside of that zero line. So our largest winner, which we'll go over in a minute here, WW at 34.78% was this tall spike here. And then our largest loser at only negative 5.58% was over here. To the downside, it's really easy to visualize based on this chart that we managed risk really well, and I'm really proud of the team for doing that and sending out really solid alerts to the Trade Brigade subscribers. That being said, we did see the bulk of our trades happening just below 20%, a lot of mid-teens sized winners in there. And we'll look at just, briefly go through this in a minute here. So the top 5 winners, Weight Watchers at 34.78%. Grubhub at 25.32%, PBI at 23% just about, KTB 19.73%, and Pins at just about 19% winner. And then the top 5 losers, again, really proud of the team for managing the risk and sending out proper stop losses and recommendations on where to get out should a trade decide to go south on us. Plug, our largest loser, at minus 5.58%. Again, compared to our largest winner, that is nothing. AVYA, that trade was a minus 5% loser as well. CLF at minus 4.57, AA at minus 4.1, and MIK at minus 4 just about. So if you're not already subscribed and this seems like something you would be interested in, then go ahead and sign up at the first link in the description. It's 5 to 10 swing trade ideas per week sent out on Sunday nights to all of my subscribers. So this is a little taste of what it might look like should you decide to sign up for the newsletter. I always send out a thank you to my subscribers just because I really do appreciate you guys. In this, I always send out a link to the weekly watch list just because we don't necessarily cover all of those blue chip companies in this newsletter. Underneath here, I'll highlight any important things that we should be keeping in mind as we go throughout the trading week. For example, in this week, we were looking at January 1st, obviously the New Year holiday, slow volume and chop, something to keep in mind. Underneath, you'll see I always send out a broad market analysis where I give an annotated chart with some support and resistance lines, as well as noting any gaps with these yellow arrows here. I'll give you some of my thoughts in this first paragraph here, and then I will send out what I consider some of the most important levels to keep in mind as we go throughout the week. So in this example, we were looking at blue sky territory, so that's $1.5 resistance and prominent intraday levels that form to the upside, and our first key support below was at 321. Underneath, we get into the stock scans, so there will always be a minimum of 5, but if I think there are some setups that really qualify for the newsletter, I will include up to 10. you'll see I always send out an annotated chart. So on this one, I have a white support line drawn here. If we look at the description sort of down below here, we were looking at a hammer that developed on Friday right at that key support, which I had drawn in with that white line. Also, the RSI had cooled off, so noting that, we aren't necessarily overbought at this time. I gave a very reasonable target of $5. So if we look at the chart really quickly, you can see that's just around here. So only 50% of the move back up. We weren't looking for a pie in the sky target way up here at the highs or even the 200 SMA, which is this green line here. Very reasonable. Looking back at the description, you can see I also noted a stop. If we were to break down below the support level here, so this white line, we were looking to stop out because the potential for a gap fill could happen. The 50 SMA might hang up prices on the way before it gets to a complete gap fill, but that could be a nasty trade or nasty loser should we hang on to the stock if it breaks down below that support. So that's just a little taste of what happens when I send these out. If you look at some more of them here on E-Trade Financial, ETFC, we were looking for a breakout over this white line. If I zoom in real quick, so you can see that white line. We were looking for the pressure cooker to break out and trigger over that line. Here on Plan, this is a symmetrical triangle that we were watching with a trend in the major to the upside. So a breakout to the upside was more than likely on that one with a hammer there at the lower support trend line. Again, another rising support trend line and a descending triangle at the top. We were either looking for a breakout over that white resistance line or a better entry closer to this one here. So again, I'm not necessarily telling you exactly what to trade. I'm just alerting you to setups that I really see potential in, and you can make decisions based on your own risk tolerance, looking at the chart and sort of, considering your own risk tolerance, really, if you want to get in, if you want to wait, or if you want to pass the setup as a whole. So that's sort of what this looks like. That's what they all look like when I send them out. And now the moment we've all been looking forward to is looking at the charts of the top 3 winners and the top 3 losers. So here on WW, I alerted the setup when we had a couple of hammers and consolidation forming right around this key level of support. Now that we broke over this resistance, it was support. You can see we sort of consolidated, and then earnings obviously had a lot to do with getting that big percentage gain. But like I said, when I was doing the math and looking at entry and exit, I essentially stopped us out on this red candle here, right in the middle. So I didn't say that we made 100% over 100% by holding on to it the whole time from my alert all the way to the highs up here. No, I gave us a very reasonable stop out when we broke back down below our 2-day support and 2-day low. That's where we were out. But obviously, if you held on to this and got back into it here, closer to this trend line that started to develop, it could have been a much bigger winner. So that's what I mean by when I was giving the market the benefit of the doubt and not the trader. Grubhub was another big winner. You can see that we were in when we started to break into this gap fill territory. We saw a nice little move up, and then we didn't stop out because we were holding on to our stop below the low of this hammer here. So if you took some profit off right when we came up to this sort of resistance that we saw, if you got out of it, somewhere here, then you still had a nice little trade. But if you held on, it really paid off because we had almost an 80% gap fill. I probably would have stopped out on this consolidation and this big red day here, which we just had today on the 2nd of January. So that could have been a stop out there. However, again, nice little percentage winner here. If you respected the stop of the original trade all the way back down here, we saw a nice potential possible gap fill started. We held strong, and then boom, we really got the move we were looking for on a second wind here on December 10th. So PBI was a great setup. You can see that we had a double hammer candle form right here, right just above the 50 SMA, which is this blue line. So we were in there. We went sideways for a bit, and then you can see this nice red candle didn't stop us out on the low of the first and lower of the 2 hammers. And then from there, it went to make a nice move to the upside. Obviously, this one is a lower priced stock, so we were able to capture a higher percentage, which is why this one made it to the top 3 of the biggest winners that we saw in 2019. So plug, this is an interesting one. This is one that we were looking at a short play, and after I sort of realized that shorts weren't really working out in the newsletter, I really focused more on the longs, and you can see that if we look back at the data here, but I was looking at this inverted hammer right at the 50 SMA after we were in sort of a minor downtrend, if not consolidation and sideways action. So I was thinking short here, looking for a flush at least down to the lows of this here at 189. However, you can see that didn't happen. We were still entering the trade because we broke down the low of this inverted hammer here with this red bar. So we were in the trade, but then immediately stopped out once we broke over the high and sort of resistance level here. Once we broke over that, we were out of the trade for that small loss, which was only a minus 5-point-something% loser. So AVYA was another one of our losers, but you can see we had a hammer candle here form right at support. we got in on the confirmation of the break of the previous high. We sort of went sideways, and then we stopped out once we broke down below the key support and the low of our original hammer candle here on this day. Of course, it rebounded the next day and made a small move to the upside, but we would rather stop out than risk a huge slide to the downside. Obviously, if we kept on going down from here, our next support didn't come into play really until back here at $10.53, which was not a reasonable amount of risk to accept for such a small trade here. And lastly, CLF here, you can see we were in a bullish channel, and we saw a couple of hammers and consolidation start to form right at the lower end. So I was thinking long. You can see we were in on this initial green day where we broke over the 2-day highs. And from there, you can see this nasty move really started. We stopped out once we broke down below the low of this first big green candle here. So stopped out and avoided this nasty day to the downside, and essentially a nice little downtrend that followed after that. So again, managing risk, and by sending out, stops that are very reasonable and will keep us in the game for the long term, sustainable mindset. That's sort of what we pride ourselves here at Trade Brigade. So missed out on a huge loss just based on the fact that we really respected the stop there. And when we did break down below it, that's where we're supposed to stop out. So that's going to wrap up the review of the Swing Scan newsletter. If you learned anything or are interested in the newsletter, then feel free to join at the first link in the description. If you have any comments or critiques or any recommendations where we can make this better going forward into 2020, then feel free to let me know in the comments section or shoot me an email over to newsletter@tradebrigade.co. I'll be happy to get back to you and possibly implement some suggestions that we do get. With that being said, I wish you a prosperous year in 2020. I really hope you join and find value in the content I provide. And with that, I wish you a green trading week.